Hello and welcome back to Global Value. In today's video, we will be performing a stock analysis of Palantir Technologies, ticker symbol PLTR. Our stock analysis will help us get a fundamental view of Palantir looking solely at their financials. This will help to provide a starting point of how to think about the company as an investor. Before we get into the stock analysis, let's remind ourselves of the 4 principles of value investing. Principle number 1, when you purchase a stock, what you're really buying is an ownership share in that stock's underlying business. Over long periods of time, a stock is going to return approximately what its underlying business returns. Value investing principle number 2, Mr. Market is there to serve you, not to inform you. This is because price does not always equal value. Our job as value investors is to figure out when the price and when the value of a company are significantly off. Ideally, the perfect purchase would be of a business where its value is steadily increasing while its price has completely plummeted. Value investing principle number 3, margin of safety. In order to deliver superior risk-adjusted returns, every investment requires a sufficient margin of safety. And value investing principle number 4, circle of competence. Staying within our circle of competence as investors helps to minimize mistakes as well as have the conviction to stay with the business over the long run. As investors, we don't deserve to earn money from anything, business, asset, or otherwise, that we can't understand. So with those principles in mind, let's take a look at Palantir. So as of the time of recording this video, Palantir is trading for just over $12 a share. Currently, their stock price is down 43% over the past year. However, it's still up 30% from when Palantir went public through a direct listing in 2020. Over this 1.5 years of being a public business, that's about an 18% compounded annual return. Currently, Palantir is just a few dollars over its 52-week low, but it's been cut down in half from its 52-week high, with a market cap of $25 billion. As for some background about the business, Palantir Technologies Inc. builds and deploys software platforms for the intelligence community in the United States to assist in counterterrorism investigations and operations. The company provides organizations with solutions to manage large, disparate data sets in an attempt to gain insight and drive operational outcomes. Palantir released its Gotham software platform in 2008, which focuses on the government intelligence and defense sectors. Palantir expanded into various commercial markets with its Foundry software platform in 2016, with the intent of becoming the data operating system for companies and industries. The Denver company had 125 customers as of its direct public offering, and roughly splits its revenue between commercial and government customers. Palantir Technologies was founded by Peter Thiel, Stephen Cohen, and current CEO Alex Karp in 2003, and is based in Denver, Colorado. The company's name is derived from the Lord of the Rings, where the magic Palantiri were seeing stones, described as indestructible balls of crystal used for communication and to see events in other parts of the world. Now let's get right into the fundamental analysis. We'll be performing an 8-pillar analysis as popularized by Everything Money. Pillar number 1, we're looking for Palantir's average 5-year PE to be below 22.5. So we only have data from 1.5 years here. However, this one's going to be an X. They've had negative earnings over this time period, and their average PE has been about negative 38. Next, for pillar number 2, we're looking for their average 5-year return on capital to be above 9%. So here again, we don't have 5 years of data, we only have 4. However, this one's going to be another X. Palantir has had a negative return on capital over the past 4 years. There may be some bright side here as their return on capital has been increasing over this time period, going from negative 118% to only negative 16%. So take that with a grain of salt. Next, for pillar number 3, we're looking for 5-year revenue growth. Here, Palantir does an excellent job. They've grown revenues 2.5 times over the past 5 years. So as an investor, one thing you want to ask yourself, is this revenue growth durable? And will this continue on into the foreseeable future? Scrolling down, pillar number 4, we're looking at net income growth. So in 2018, Palantir had a loss of $580 million. They've shortened that loss to $520 million as of 2021. So even though it's still a loss, this is technically a check here. Pillar number 5, we're taking a look at shares outstanding. We don't want a business to be issuing new shares and diluting existing shareholders. This is one of the secret killers that takes away from your returns over time. In 2018, Palantir had 544 million shares outstanding, and that increased to almost 2 billion shares outstanding as of the end of 2021. So this has been about a 70% dilution. So they've significantly diluted shareholders. So that is going to be an X. Next, pillar number 6, we're looking for 5-year free cash flow growth. So in 2018, Palantir had about negative $55 million of free cash flow. Their free cash flow did grow. In 2021, they had about positive $320 million of free cash flow. In between, in 2020, they had negative free cash flow of $308 million. And in 2019, they had a negative $180 million of free cash flow. Averaged out, they're burning about $56 million of cash each year. One thing to mention, and I thought this was kind of interesting, is that in 2021, Palantir spent $382 million, so more than their free cash flow, on investments in marketable securities. So in order to understand the business, you want to understand what this investment was and why they decided to make it. Moving on to pillar number 7, we want Palantir's net debt to be below their 5-year average free cash flow multiplied by 5. So Palantir has negative net debt of $2.2 billion. What this means is that after subtracting their long and short-term debt, Palantir actually has $2.2 billion of cash and cash equivalents. So even though they're burning $56 million a year, they have more than enough cash cushion on their balance sheet. So this pillar is going to be a check. Finally, the big pillar of them all, pillar number 8, we're comparing Palantir's market cap to their 5-year average free cash flow multiplied by 20. So currently, Palantir has a market cap of just over $25 billion, and they've been burning about $56 million of cash in an average year over the past 4 years. However, if we were going to multiply just their free cash flow from last year, which was $320 million, that times 20 comes out to $6.4 billion, which is still only a quarter of what their market cap is. So unless they're able to significantly increase their free cash flow and solidify that free cash flow profile in the coming years, this looks expensive relative to its free cash flow yield. So in summary, Palantir checks the box on 4 out of 8 pillars. They have very good revenue growth. They were free cash flow positive last year and use that money to invest into equities. So you want to understand their strategy there. They also have a pretty sizable cushion on their balance sheet. However, they've had negative earnings. They have a negative return on capital. They've significantly diluted shareholders, and their free cash flow is nowhere near their market cap. As an investor, similar to a lot of these other high growth tech stocks, you have to understand, is this growth durable? What rate are they going to grow revenues over the next 10 years? And is that something that you can reliably predict? To really understand a business, you should have a reliable understanding of where its earnings and where its free cash flow are 10 years from now. To understand Palantir deeper, it's not a bad idea to look at their 10K. It's also not a bad idea to do the work and understand what their contracts actually look like with some of these huge customers. With a lot of these government agencies and these large enterprise customers, these are going to be multi-year. So really it's about understanding what is the level of lock-in, and does Palantir have the ability to increase prices for their services going forward into the future. If they do have that lock-in and they do have that pricing power, when is a reasonable amount of time for that to show up in their financials? So these are just some things to think about if you're interested in understanding Palantir in more depth. Well, guys, that's it for today's fundamental stock analysis of Palantir Technologies, ticker symbol PLTR. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Have a great day, and thanks for watching all the way to the end.